Hello and welcome. You are watching Business Plus here on News 9 Live. I am Krishnakumar and I'm being joined in the studios by my colleague and friend Suyash Maheshwari. And as always, we begin this afternoon edition of Business Plus with a check of how India's stock markets closed today's trading session. Sensex up over 300 points while the Nifty is back above that 19,000 mark, isn't it, Suyash?
Yes, Krishna. So after a muted opening in which we saw Nifty even dipping below the 19,000 mark within the first hour or so of trading, Nifty and Sensex both not only paired all losses but then added to it and ended with moderate losses amid buying interest in index heavyweights like Reliance Industries, your HDFC Bank, your ICICI Bank. Now at close, Nifty was up 0.49% with the last tick for the benchmark index coming in at 19,140 mark, which was just about 18 points shy of the day's high. So we are pretty much close at the day's high, which will augur well for the bulls. Sensex, on the other hand, as you rightly pointed out, ended about 330 points higher, closing well above the 64,000 mark. Now the broader markets were underwhelming today. Both Nifty Mid Cap 100 and the Nifty Small Cap 100 ended with moderate gains of about 0.1 to 0.15%. Now shifting focus to sectors, Krishna, Nifty Auto and Nifty FMCG were clear underperformers today. Apart from Nifty Auto, Nifty FMCG and also media, which closed pretty much flattish, all other sectoral indices closed in the green. Now Nifty Auto declined by about 0.9%, whereas the Nifty FMCG pack was down about 0.5%. Nifty Bank, on the other hand, Krishna, continued to build on Friday's momentum. On Friday, we saw a jump of about 500 points. Today also, Nifty Bank closed about 0.6% higher. And what's more important, I feel, is that it has reclaimed that 43,000 mark, which according to analysts is going to be the make or break level for the index. So if the index continues sustaining above 43,000, we can perhaps see a move, up move from here on. Otherwise, the weakness is expected to continue. At least that's what the analysts are expecting. Realty pack was a top gainer in today's session. Nifty Realty ended with gains of about 2%, over 2% actually. And other sectors that I'm looking at, the pharma pack ended about 0.25% higher. The metal pack was up about 0.23%. The PSU banking pack was up about 0.14%.
That's right. PSU Bank up as well, Nifty Bank up as well. That's how the broader markets were. We have Mr. Aamar Deo Singh, Head Advisory of Angel One, set to join us on the show to help us break down the day's trading session. But one thing I want to ask you before that, Suyash, is that if you checked the volatility index, India VIX 2 was up over 5% for the day's trading session.
In fact, Krishna, in the morning trade, the index was up about 10% or so. So, the volatility has reduced, but yeah, it's elevated. It's elevated compared to other days. And I think the volatility India VIX is currently below the 12 mark. So, that overall indicates that the volatility in the entire market is expected to remain low at least for the next 30 days or so. But yeah, a decline in volatility will augur well for the bulls, especially after the kind of bounce back we have seen in the last couple of sessions. Nifty tested that 18,800 mark. Again, I think it tested the 18,900 mark today, but we have seen a good bit of bounce back from there on. And Nifty not only has, scaled 19,000, but sits very well above it, above the 19,140 mark.
All right, fair enough. Let's now take this across to Mr. Aamar Deo Singh, Head Advisory Services at Angel One, who joins us live on this broadcast. Aamar, great to have you on the show. Talk to us a day which didn't begin all that well, ending very well for India's main indices. Sensex up over 330 points, Nifty back above the 19,000 mark, but still volatility index continuing to be up above that 5% mark.
Yeah, I would say if you look at Nifty over the last few trading sessions, I would say beginning from somewhere around the mid of October, that is around 14, 15 October onwards, we've seen Nifty witnessing a significant slide, almost 1,000-point correction we've seen in Nifty. And then what we are seeing right now is that a bounce back is there, and that was expected also, because if you look at most of the indicators, they are clearly pointing that they were in oversold territory, and also looking some of the heavyweights that also was displaying the same thing. And Reliance definitely did play an important role today for the pullback that we witnessed. And also, if we look at the global markets, there are concerns, but it doesn't appear that the Middle East crisis would really go out of hand. So I think that's what the markets are expecting and anticipating and factoring in. And also, as you rightly said, that India VIX did move up by more than 5%. I think at a point of time, it was around 8 to 10% up. But see, the important thing is what's the range that we are looking at India VIX. So India VIX still does not trade above the 12-14 level. So because trading above the 12-14 level would be a sign of concern, and if it starts sustaining above that level and above 20, then we are in for serious sell-off happening. On the downside, yeah, these are levels which are very well the markets are expecting, and investors have also and traders have also accepted that this is the way it is going to be. We'll have volatile trading sessions, and one needs to be prepared for that, given the geopolitical tensions and other global factors which are at play.
All right, so jaisa hai vaisa hai seems to be the attitude that the markets are taking towards global uncertainties at this stage. The question I want to ask you is many analysts are talking about an impending correction for the run-up over the last 6 months. Many are convinced that we are, at the end of the day, in the middle of bear markets. My question is, are we bottoming out now, or is the bottom expected 3 months from now, say in December?
Yeah, I would say that if you ask me, we are definitely seeing some sort of higher levels topping out. So what it effectively means is that the highs that Nifty had made close to 20,000 levels, we've seen it, the earlier level somewhere around 19,750 and then around 20,000 levels. So that clearly tells that there is very high selling pressure at those levels. And there's a lot of selling coming into all different categories of stocks. So be it the large cap, mid cap, small cap, we're seeing it across there. As far as technically speaking, I would say till the time I don't see Nifty sustaining or trading below the 18,500, 600 zone, I would say that the trend, long-term trend on the quarterly charts, that continues to be strong. There's no doubt about it on the Nifty. Now on the monthly and the weekly charts, we are seeing some sort of a momentum loss of momentum on the monthly charts, and the weekly charts are clearly pointing that there is some weakness there. So what it effectively could mean is that higher levels will be sold into, and we could see some lower levels as well. So 18,500, 600, that's a very important crucial zone on the downside. On the upside, I would say once we start seeing Nifty sustaining of the 19,400, 500 zone, then we could say that that now we are in for some up move. So it could be more of consolidation, as some of the technical indicators are pointing. I wouldn't say that we are getting into a bear market right now.
All right, fair enough.
Sir, my question is, what's your overall read of the sentiment of the market? I hear that you expect some sort of a consolidation going forward, but is it still a sell on rise market, or has at least a near-term momentum improved, given that the kind of movement through 200, 250 points movement we have seen in Nifty in the last couple of sessions?
See what's happening in some of the indices. I'll talk about, for example, Bank Nifty. So Bank Nifty, what we've seen is we've seen a significant correction from almost 46,000 levels to 42,000 levels. Now, where the market is, Bank Nifty currently is, the recent low, that's something which is very important, very crucial. So what it effectively means is that if these lows are breached, then we could see some further sharp sell-off happening in all across the board. And as far as Nifty is concerned, I would say again, for Nifty, the level would support somewhere around 18,800 immediate. But below that, if Nifty starts trading, then 18,500 is a level where 500 to 600 is a support zone for Nifty. So for traders, I would say it's like, if we talk about today itself, the way we saw some correction, and then there was a pullback and markets closed very close to its highs. So what it tells me is that there is buying interest which is also coming in. The only question is that, is there a follow through? And the follow through would have to be in the major large caps and in the front lines. So whether we'll have to watch out if that's happening. And the second thing is, we'll also have to look at the advanced decline ratio, because that's a very I would say good indicator to tell us the overall sense of the strength of the overall market. So currently we saw that today also the advanced decline was in favor of the advances. I'm talking about the overall all the stocks put together. So that tells me that it would be more of buying at lower levels, selling at higher levels. And as you said, some of the technical indicators do point that there could be more selling at higher levels as well.
All right. Fair enough. At this stage, of course, the story of the day is that the broader markets have outperformed the headliners, but we need to check in on what were the big gainers and losers as far as stocks are concerned. Suyash, talk to us who were the top gainers and the top losers in today's trading session.
Yes, Krishna. So let's look at the gainers among Nifty, among the blue chips first. Now, BPCL was a top gainer in today's session. The stock, in fact, snapped out of its 5-day losing streak to rise about 3.5% in today's session. Now, BPCL has reported a net profit for the September quarter against a loss in the year ago period, and marketing margins have also improved on the back of a softening of crude oil prices on a year-on-year basis. Another gainer was Ultratech Cement. Ultratech Cement, in fact, extended its winning run to about 2 sessions. Yesterday after the market hours, there was news that came out that the Aditya Birla Group company is looking to, has committed, in fact, 13,000 crore towards capacity expansion. So I think that was one of the reasons why we saw, a 2% jump in the stock price today. ONGC was up about 2%. Reliance also gained almost 2% in today's trade. Now, of course, this was on the back of a good set of numbers coming from Reliance Industries. The conglomerate on the whole saw double-digit revenue growth in the retail segment. The telecom business also saw a steady improvement on a quarter-on-quarter basis. Now, I was reading some of the brokerages report this morning, Krishna. Good outlook from brokerages. Jefferies, in fact, has given a buy call with a target price of 3,000 rupees. Now, this implies an upside of about 30% from today's closing. Now, Kotak has also upgraded the stock from buy to buy from add, and has raised the target price to about 27 and 25 from 2600 earlier. JM Financial is another one which has maintained its buy call on the stock, and it has a target price of about 2900. Now, SBI Life also gained today about 1.7%. Now, among losers, Krishna, UPL was the top loser among blue chips today. In fact, it did come out with its results right as we were stepping in the studio. So, the firm has reported a net loss of about 190 crore. The street was expecting a profit figure of about 300 crore. So, a major miss on that profitability front. Also, the company has cut the revenue as well as EBITDA guidance for the entire year. And in fact, it sees EBITDA declining for the full year, whereas it was expecting a positive figure.
So
on the
no
EBITDA front.
operating profits at UPL for the current year is what the scenario is looking like.
That's what the guidance coming out from management is. Of course, we'll hear more as and when the earnings con call is happens. Tata Motors was also down. Tata Motors was down about almost 1.8 to 1.9% or so. In fact, it was on the back of a broader decline in auto stocks, as we saw Nifty auto corrected by about 1% in today's trade. In fact, Tata Motors, as I can see on my screen, was a top loser in the entire Nifty auto pack. So, good bit of run up it has seen year to date and on a month-on basis, but we are seeing some profit booking taking place at higher levels. Maruti Suzuki was another loser today. It corrected by about 1.5%. Now, this was despite the company reporting a good set of numbers in which it saw, highest ever sales volume on a quarterly basis, highest ever profit, highest ever sales in, in rupee terms. But it seems that, after touching that record high on Friday's session of about 10,850, the stock is seeing some sort of a profit booking take place. Also, this morning some of the brokerage calls came out. Citi expects, Maruti Suzuki to rise as much as to about 14,500, implying a upside of 40%, Krishna. Nuvama has also upped its target price to 12,500, and Motilal has also raised it from 11,900 earlier to about 12,300. Eicher Motors and Axis Bank were also among top losers in today's trade.
Clearly, Auto Pack losing some biggies in the day's trading session. Aamar Deo Singh is still with us. Aamar, your thoughts on the big gainers and losers in the day's trading session? Auto Pack clearly emerging as a big loser.
Yeah, I would say that among the gainers, we've seen some sharp up move in Reliance, because we saw that post its results, Reliance has bounced back. But overall, if you look at Reliance hasn't delivered, I would say, returns to its investors over the last few quarters. So clearly that tells me that on the downside, it's got very strong support coming on the 2200 level. So from a long-term perspective, that's a level to watch out for. Whereas again, on the upside, I would say somewhere around 2400, 2600, that's a zone, upside resistance zone for Reliance. The long-term charts also clearly points towards more of consolidation.